So there has been a ton of news pertaining to Tesla stock, with one of the major ones being Elon Musk announcing a new CEO for Twitter, and along with that responding to someone else saying that this new CEO of Twitter would allow Elon Musk to dedicate more time for Tesla. Now, while this may sound very bullish for Tesla stock during the announcement of this managed to still flop during Friday's trading session. Now, although the announcement of a new CEO for Twitter is a nice little catalyst event for Tesla, I want to go ahead and highlight some macroeconomic data points that is definitely moving the overall markets and is definitely impacting Tesla. Now, if we pay attention to the CPI report, which is a gauge on inflation, we see that there was slightly a bit of a dip. And while many celebrated this dip, I want to remind you guys that this dip is very minuscule. And in fact, if we actually parse through and look at the core inflation month over month, core inflation actually rose. Now, one of the things I've said a multitude of different times to people that watch the channel and people that are part of the Push and Profit private group is, yeah, getting inflation from its peak levels down to the fives is not that difficult of a job. However, getting it down from 5 to 2% is really where the battle actually takes place. And that's because the lower you try to go on inflation, the stickier it gets, as you really have to target the core inflation. Now, we still have a couple more inflation reports due to come out before we have the Federal Reserve come out and have them make their decision on whether they're going to be hiking rates, pausing rates, or cutting rates. Now, it's still too early to say what exactly they're going to be doing because we don't have the data out yet. However, based on the current data we have right now, it's very difficult to see the Federal Reserve actually cut rates, especially with the current data showing us that inflation is still very elevated. In fact, it's actually more probable that the Federal Reserve is going to either hike rates or pause rates. Now, the problem is that even if the Federal Reserve decides to pause rates, while that may seem very optimistic and the market may react very bullish to that, the problem is rates are still at a high level. And see, when rates are at this high level, it's kind of like keeping the oven on, right? And the problem is when you keep the oven on, eventually someone is going to get burned. Which is why we have tweets from Elon Musk saying an economic enema is en route. So with the Feds pressured by inflation, current monetary policies are due to break something, which is why we've seen the calamity in the banking crisis, and we're most likely going to see more pain elsewhere as the domino effect takes place.
It's happening.
This is the reason why we're seeing Chapter 22 bankruptcies at its highest pace since 2009 for companies with over $10 million in liabilities. This is the reason why when Tesla stock was rallying up in the beginning of the year, I made sure to tell the Push and Profit private group that, yeah, this is bullish in the short term. However, don't let this make you believe that the bear market is over, because the macroeconomic environment still has not changed. Now, quick plug, if you want to be able to be a part of the daily briefings in the Push and Profit private group, make sure to check out the links in the description of this video below, because there is a huge discount for Mother's Day. I'll also go ahead and make sure to pin it in the comment section below. But also, with that being said, if you guys are not subscribed to the channel, make sure to hit that subscribe button, because YouTube tells me that over 80% of people that watch this channel are not subscribed. Now, along with monetary policies hurting the overall stock market, including stocks like Tesla, fiscal policy is also looking like a disaster, a circus, where we have both political parties arguing about the debt ceiling when we literally have just a couple of weeks left before the United States could default on its debt. Now, I don't believe that politicians on either side are that dumb to actually let this happen. However, a lot of the uncertainty definitely causes stress in the overall market, which is why when we take a look at the recent consumer sentiment, we see that sentiment is actually very low. Now, this is the very reason why I'm very bearish on Tesla in the short term. Now, I know this throws a lot of people off, because in a lot of my other videos I talk about how I'm very bullish on Tesla. However, I'm bullish on Tesla in the long term, right? But in the short term, I'm very bearish. So that means that in my long-term portfolio, what I'm going to be doing is adding more Tesla into my long-term portfolio. However, in my short-term trading account, right, because I have two separate accounts, one for long-term investing and one for trading, in my trading account, I'm most likely going to be shorting Tesla by either shorting the stock or buying puts, or maybe not even touching Tesla at all in my trading account, and really just adding into my long-term account. With that being said, guys, hopefully you enjoyed this video. I know it's a very quick video, but also make sure to watch this next video right over here where I explain why I always trade Tesla stock, and also watch this other video if you haven't done so already on why you need to use Webull.